Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report. I'm Frank Ochoa, aka PivotBoss, with analysis for today's market, June 28th, 2016. Here's a look at the daily time frame of the ES. We've had a significant two-day sell-off here from Friday's market where it attempted to push beyond prior highs. Price rejected off those highs, and then obviously we got a major sell-off all the way back through value, closed back below micro composite VAL, and are now trading below value. So this is very important here to see how the market's going to respond to these prices. One thing we've been talking about is every time price got below the 2030 level and into the 2020s, that's usually been an area where we could buy or look to buy for a push higher. And that's been the game here over the last several weeks. The last time though, we didn't quite get as far down. We got into 40s and then bounced, rejected, and then ran the stops all the way down, and we're now below that 2020 zone, 2030 zone. So it's going to be important to see how this thing reacts, because what I mentioned before was if price cannot maintain acceptance here above this zone, then you would likely see price auction lower toward 1920 and then perhaps all the way back toward 1800, because that's the path right now. We have this distribution here, we have this distribution right here, and we have basically this area right there where basically price auctions higher and creates a new distribution. That's an imbalance price discovery phase. We could be looking at a similar move right back down toward 1920 and then another distribution that forms down below. So there's something that could play out here, but we got to continue to be patient to watch. We can't jump ahead of the move by any means, because any reacceptance back above 2020, back above 2030 could lead to another big move back up. As it is right now, we have a major impulse move from this high all the way down, major impulse move. If we were to swing back to the midpoint of that range, that would create an even larger key range that we can now watch for the end of the year. So right now, the key zone to watch, 2018 half. That's the previous close. We also have the previous week's low, 1999. That was the key level to watch yesterday. And now we're back above that level right here. So watch 1999 above that level, opens up a retrace back toward 18 to 28s. And in that zone is where bears really want to step on the gas to push it lower. Otherwise, you may see it climb back up. So right now, just kind of watching to see how this thing continues to play out around 1999 and 2018 half. If we drop into the intraday time frame, you can see here that in the previous session, price broke below the previous week's low, 1999, and held throughout the session, but did not make new lows. It just formed a box below that zone. And in this session, we broke back above that area in overnight trading here. And right now, we're currently sitting above 1999. So that still remains the major pivot. Since all of these bears got short throughout the session yesterday, created an entire distribution down here, 1991 as VPOC 5-day, and yet they did not get paid, and price is now popping back above that key level of 1999. That could easily lead to a wave of strength back toward 2028 to 2030. As a matter of fact, right now, if we bring up our primary bull target for the day, we've already reached it. At 2007, we can still reach the 100% target at 15.5, and the extended would be 2023. So this is important. Again, that's all dependent upon if price can remain above 1999. Failure to hold back above that zone would re-auction prices back toward 1981 half and perhaps push through a new low. All right, let's take a look at crude oil. Here's crude oil. Again, another one that's been volatile after the Brexit vote. And this one is testing the bottom of its key range here, the 46.40, 46.50 zone. That's very important. Price pushed below it briefly in the prior session and already popped back above it, testing the previous week's close. As I mentioned before, we've been in an uptrending market, significantly uptrending market, at least in the short term here, from 26s on that recent front contract where it hit 26s all the way up to 52s. That's basically a double here. And now we've kind of pulled back. So most of the time here, as I mentioned, price will be defended, and you could see this thing attempt another move higher. But if price cannot hold or remain bid above value here, 45.22, and takes it offered, we could be looking at more downside price discovery here. So again, not easy on direction. We do have this major LVN key level zone, 47.95. We also have 46.50, and that's the zone that we're trading in right now. So that's kind of the range. If we drop down into a lower time frame right now, for crude oil, you can see it's been a nice recovery to the upside. VWAP has been bid throughout the uptrend, and right now we have VWAP at 47.24. A retest of that zone could offer a buying opportunity for another squeeze back up. We have the midpoint at 47.12. So right now, in uptrending market, pullbacks should be defended until the mid gives way. So all pullbacks into this zone could be a nice buying opportunity for a push into 47.93 and 48.14, and perhaps even higher. Failure to hold above 47.12, auctions prices back toward 46.70 and 46.48. Looking at gold now. The gold contract here, a big time spike up near 1366, our rejection level. Price pushed back, and now it's trading around 1319. So I told our traders that 1319 is the major level to watch. Big time key level there. Failure to hold above that zone would re-auction prices back toward 1260 and 1238 half. Holding generally above 1299 would imply at least another retest back toward 1366. But remember, this is a major 5-year CLVN, composite low volume node, and that's why you saw rejection in that area. It's been a very significant rejection area over the last 5 years, and so right now you're seeing the early signs of rejection, which could push price right back down, especially if 1319s cannot be held. All right, so let's take a look at the NQ now. On an intraday, rather on an end of day time frame, you can see a couple of things. We have some major HVNs here to watch out for. This one's 44.86 half. This one's 43.89 half. I can update that if need be, but you can see those HVNs are basically right there, and price attempted to hold above this one and failed, came back, rejected off of it, and went offered through the lower one. That is a big time reversal signature there, where the market is rejecting value at these higher levels, which usually leads to a price discovery phase, and we're currently in the midst of that now. But we could be at the beginning of a price discovery phase, because if we're going to hold below the key lows here, 42.63, the implication would be a downward push back toward 3900 to 38.50 to retrade those prices, at which point bulls would look to come in and defend and return them back up. So again, we have to see how price responds here. We have this micro composite VPOC at 43.24. Any return to that level could be a selling opportunity for a push back across the range. So that's kind of how I'm thinking right now, but again, this continues to develop, so we have to continue to watch it very closely and watch our key levels for signs of future direction. If we look at the intraday time frame really briefly here, you can see that price has been pushing up. We have a rising VWAP here, so that means pullback should be defended until proven otherwise. We have an LVN on a 5-day profile here at 42.12. That's a zone where bulls want to keep bid. So every time price drops into this area, you want to see bulls defend it. Failure to hold that zone would auction prices back toward the previous session's close. Right now, given the current overnight low, if we bring up our bull targets for the day, our primary bull target is 42.35, almost there. 42.55 is the secondary and the 100% ADR target. So again, if prices are able to be defended off the LVN or perhaps at the midpoint of the range, somewhere in this zone, you may be able to flip this back toward 42.55 and perhaps the previous week's close, 42.68. Otherwise, failure to hold this zone right here, again, would retest prices back near the lows. All right, that's it for now. Let's see how this thing plays out heading into the rest of the session. Good luck and trade well.